Happy New Year. It's 2023. What is going on in the Sacramento housing market now? I might just have some really good news for you, so let's take a look. Thank you for checking me out again for my monthly market update report. This is for the general Sacramento area, and I'm going to dive into some details again on Sacramento County specifically. Of course, I work outside of Sacramento County, Placer County, Amador, El Dorado County, and others frequently, but I like to focus on one large area with a somewhat diverse real estate landscape and give you those numbers to really show you how the market is healthy. Now, this first page, you've seen this before from me, Mortgage News Daily. It's a mortgage industry surveyor. I'm not a mortgage loan officer, so I like to go to this particular website as it surveys mortgage brokerages from all over the country, as well as shares financial news. You maybe have seen last time the 30-year fixed interest rate. My last video was at 6.13%, so up ever so slightly. This number changes every weekday. And as you see over here, this number here for 10-year treasury bonds, that is typically the main driver of what mortgage rates do. Now, this is the 30-year fixed rate. I believe that number's with 20% down for a conventional mortgage. And again, you don't have to put 20% down to get a mortgage. There's lots of options for 3.5% and lower, especially for veterans and first-time home buyers, anywhere from 0 to 1%. Anyways, talk to your favorite local loan officer for that kind of thing. And this is also just a quick reminder, mortgage rates and the Fed interest rate are two different things. Fed interest rate reacts to certain market data. Mortgage rates react to certain market data. Usually mortgage rates are ahead of what the Fed does. So you will hear things like the Fed raises rates. Well, most likely mortgage rates have already processed that same data, and their interest rate for the mortgage rates have already factored in that data. So one thing that happened, say in December, there was a rate increase by the Fed, and interest rates for mortgages actually fell because we were expecting that particular information. But also something that happened was inflation was falling faster than expected, so mortgage rates fell. In January, the Consumer Price Index report came out, and inflation was tapering off to the rate of expected tapering off. Whereas the previous 2 months, it had tapered off even faster. So that is good news. It's not bad news. The market basically reacted somewhat in a stable manner. So interest rates are somewhere around where they were about this time last month for mortgage rates. And I'm actually expecting them to drop slightly over the next couple of months. But things that can change that, of course, are a new consumer price index report showing inflation is going in the wrong direction or not falling as fast as we thought. I'll get into that a little bit more later. All right, so let's just get into housing market data. Yummy numbers to crunch here. So this is Sacramento County for homes on a quarter acre lot or smaller. I chose that metric just because it keeps this report a little bit more uniform, and I'd say most homes are on quarter acre or smaller. So this first metric here is homes for sale versus homes sold over per month. So you might be able to see my cursor. I don't know how well you can really see it on the screen, but I'm over here on the far right side for December 2022. Now, this report goes through the end of December. It is January right now, so we do not have full January's report yet until February. So in something that happens in November, December every year is the market tends to slow down because fewer people are putting their homes on the market. Fewer people are out buying. People are too busy doing holiday things. Homes typically don't show as well during that period. There's all sorts of reasons why the market slows down. So you typically see, you even go a year over and you see that all these bars are going down, and then you see them rising up again. So December 2022, sales are actually up month over month 1.3%, which is a little bit different than the previous year. You see that sales were maybe slightly lower, just slightly lower than November. So we're actually up 1.3% month over month. We are down 45% year over year. So as you can see way over here in December last year, sales were way up. For sale homes were way over. Actually, sales were up way higher than for sale. And that's just because there was a still not really, I want to call it a surplus of inventory. But all the remaining inventory that was on the market, a lot of it just got bought up during those holiday months. Just not enough was coming on the market for demand. That's very unusual. So going back over here to more recently, the number of homes for sale was actually down 20% month over month. So that's a decrease in inventory that tends to drive prices a little bit higher or stabilize the market. And year over year inventory is up 67%. Now, of course, year over year inventory is up a lot because of the interest rates that have risen and homes are sitting on the market longer. The reality is far fewer homes are coming on the market because a lot of people are having trouble finding a replacement property they would like, realize that the market has slowed and maybe they cannot afford the type of home that they would want based on what they could sell their own house for. And the big driver, though, is a lot of people who own homes have a very low interest rate. A lot of people have under 3%. And I don't think that I'll ever see under 3%, may not ever see under 4% for the remainder of my lifetime. That's just to me, we did get it. Just I wouldn't expect it again. I wouldn't advise to wait to buy a home until you see rates fall like that. I think you're just losing your ability to be a homeowner or maybe build equity on some properties. So back again to these numbers here. Clearly, sales are down, but inventory is down as well. And we'll see that month over month, sales numbers down for a while until we get to somewhere around the peak of May is when we're really going to see that turnaround. The May of 2022 was the peak of the market, as you can see where these sales. Actually, this one shows number of sales as April. So depending on where you're at exactly, some counties it's May, some it's April. All right, so let's go back down to the next graph. And I like to use this metric after you've researched a lot about a certain home. Never price a home based on dollar per square foot. There's so many reasons why a home can sell for a completely different dollar per square foot, either higher or lower. And dollar per square foot naturally falls as the home gets larger. Because part of something that doesn't necessarily fall is the size of the land itself. So usually, like a 1,200 square foot home has a much higher dollar per square foot sales price than a 2,000, 3,000, 4,000 square foot home. And you can see since the peak in April, May is actually the peak for dollar per square foot. It's fallen somewhat significantly and continues to fall, but it's kind of flattened out in the last couple of months here. And that shows that the market is somewhat stabilizing. It's down about 0.5% from the previous month. It's down 5.5% year over year, down somewhat significantly since the peak. We'll see where that heads. I think we're, like I said, stabilizing. All right, so let's go back down here. Let's go to this next graph. So this is actually two different things. This is the percent over and under the list price that a home sold. So you see over here at the peak, homes are selling for 104% of the list price. More recently, 94% of the list price. So if you're looking at homes for buyers, looks like there's some overpricing going on. Sellers are accepting offers under the list price. It's something to note when you're a seller. Also, you put yourself at a disadvantage when you overprice a home. You rack up those days on market. Ask a lot of people looking for homes what they think of when they see a lot of days on market. Even if you've reduced the price of the home, when they see the price of the home and they see the days on market, you have to scroll way down in the listing to find where typically you do to find that they've lowered the price. So what they think is, well, this house looks pretty good for this price. What's wrong with it? And then maybe they don't look at it. Maybe they get give you a low ball offer if they do like it. But there's kind of a little secret thing, so I'm not going to put it on the video. A little strategy that I go for when I'm listing a home, because there's something that is very bad that completely eliminates your home from the public view by overpricing your home over a period of time. And there is a way to correct it, but that is a secret of the trade that I don't see utilized very much. So you see that essentially there's homes being sold under the list price. Now, this is consecutive days on market. You see consecutive days on market going up. Year over year, 20 days on market was the average. Now it's 45. That is clearly up month over month. It's not dramatically up. Year over year, it's up, pretty significantly. 125%. And 12.5% over the previous month. So that's pretty common. You'll see over here, December of last year, even when inventory was depleting like crazy. There was not enough homes on the market to meet the demand. Still 20 days on market was the average. And that number, by the way, 45, is not too far off from the market of like 2018. So, I mean, that's not a crazy number. If you price a home correctly, it's probably going to sell unless your home's an unusual price point, more out of reach, or just your home has some like really really unusual, unconventional factors to it that maybe aren't something that a lot of buyers would want. So this next graphic isn't one I really use a lot. I've mentioned this before. Just where this green line and this red line separate, it just shows that affordability is worsening compared to what is on the market. So you see that the average list price of 570, but average sales price of 505. So those lower price homes are a hotter commodity than the higher price homes. And this one right here shows inventory or absorption rate of inventory. So there is currently on the market 1.7 months worth of inventory. So if none of the no new listings hit the market, it would take 1.7 months to take down all that. 1.7 is actually a seller's market. That is not that much inventory. So that is something that's keeping prices up. So I wouldn't expect to see prices falling a whole lot further unless there is dramatic changes in the economic world. Big, a recession, job losses, foreclosures are still near all-time lows. So, you're not really seeing foreclosures really happen. Not a whole lot of them. And even if there are people who can't afford to keep their homes right now, because the market is still somewhat healthy, it's more likely that they have equity. So they just sell their home and it's a regular sale, not a foreclosure. So I wouldn't expect to see an increase of that as well. So there you have the data there. Now let's talk a little bit about the summary of this. So there you have it, the latest report for January 2023 for the Sacramento area real estate market. So what does this all mean? It looks to me like the market is stabilizing, and that's great news for sellers. That could be good news for buyers as well, because of course, once you buy a home, you want the market to be stable, and you don't want to lose equity in the short term. Now, just remember, like from my other videos, I've shown graphs of the housing market over a period of time, and you see that real estate ends up on the upside. There's always annual inflation, nearly always annual inflation of at least 2% or higher, and the value of the dollar loses value over time. Historically, real estate has ended up. It's a jagged line, but it's an upward moving jagged line. Let's see. So also from here, what we could probably expect is we're moving into spring, and typically in spring is where we see a lot more listings hit the market, but also a lot more buyers coming out too. So as long as rates stay stable, I think that we're going to see a pretty stable market. It's not going to be anything crazy. I don't think there will still be those longer periods of days on market for homes, especially if they're being overpriced, not using data. We'll start to see the year over year numbers flatten out to be somewhere around even later this year. So that can all be good for a stable market. Some things that could turn it around, of course, is if another consumer price index report comes out and inflation is hotter than they thought. Then interest rates for mortgages take a turnaround, and if they start pushing up towards 7%, then that's going to have a dramatic effect on the market and push it downward. But right now, we're not really seeing that. It's way too early for us to really tell where inflation is going to ultimately go. But at least they've seen multiple months in a row of a trend of it going down. Some other good news for buyers would be that there's a lot of great deals right now on new construction. So if you're ever thinking about going out for new construction, I highly recommend you contact your agent first, because once you go in and you register at a new construction site, you're now their client. Even if you had an agent and intended to work with that agent. And a lot of times people think with new construction that it's kind of like a new car lot. You don't go in and you have your own agent or something. But it's just like any other sort of real estate transaction. So if you go in there, then they represent you, and you may not know certain ways that you can negotiate. And in my experience, from what I've seen, where I've helped buyers out who try to do it they're on their own for new construction is I'm able to negotiate a better deal for them. A lot of times the builders treat the agents in a different manner than they would the general public as a buyer. And there's just other things like I always pay for a home inspection at the end. You might think a brand new home's got to be perfect, right? I've had home inspections on a brand new home to see some kind of really crazy stuff. I don't want to bog down this video too much with those little stories, but always get a home inspection for even new construction. Once it closes, get a home inspection. There's usually a one year fit and finish warranty on that thing for even the small details, and give the builder that report. But I usually pay for that for a buyer when I help them with new construction. Anyways, there's some really great deals out there. Even if you see something on the market for 600, I've had an experience recently where one of my contacts was able to get under 500,000 for a new construction home that was listed at around 600,000. So there are some great deals out there. Anyways, if you have any other questions for me, I'd love to take a look at your situation, your home. If you want an evaluation of that, just reach out to me, comment below, or my contact information is down there too. And I'll see you on my market report next month. Thanks for watching.